Hello everyone, this is Dave, aka DREBG, senior member over at InformedTrades.com. For those of you not familiar with Informed Trades, I welcome you to go over and poke around a little bit. There's tons of information. They have the IT University that has a wealth of information that you'll not find anywhere else on the net. You can even open up your own blog for free, and it's a great place to learn and also share some ideas. I decided to make a video based on some private emails that I've received from some newbies who maybe have seen a video or two on YouTube, or they visited my blog over at Informed Trades with a lot of basic questions about how do you set up your charts, how do you identify support and resistance, how do you read price action, what do you use for indicators, those types of questions. So I thought it would be nice to start a video that had absolutely nothing on it and then take it all the way through to how it might look when you identify a setup, and then where those entries and exits might be, and what you really need to be aware of while that trade progresses. So let's get started. First of all, we're looking at the pound-dollar pair. Today is Tuesday, November 30th, 2011. And I'm going to go through what I typically do when I look at a chart for the first time or I come across it. This is a 1-hour chart, and I like to oftentimes make sure I put the big areas of support and resistance in. For me, those are weekly and monthly pivot points. They're great. A lot of traders use them. Even if you don't trade off of them or use them specifically, they really create nice areas that you can at least be aware of where price action may be making some sort of a change. Next up, I'd like to throw in a moving average. Personally, I'm a fan of the 20 EMA. I'm also a fan of the 200 EMA. It seems to me that those two work well for what my style is. I don't trade off of them, but I do use them as guides of where price action is. In this case, it looks like perhaps there could be a crossover to the upside, though that may not happen at all. It just is nice to see it in a format that is more than just price action, so we can get a feel for exactly where price action is relative to everything else. So, as my title indicates, I see a bull flag setting up. And this bull flag is easily seen when we draw in the lines where price action is currently consolidating. We see a flag waving to the right. We see the bull candle to the left acting as the pole. And this is a very typical bull pattern that we might expect a breakout, some sort of a retrace, and then a continuation. In order to maintain good money management, it's a good idea to identify a few other levels of support and resistance or supply and demand beyond just the weekly or monthly pivot points that I've indicated here. What I do for that is simply zoom out. This is a daily chart. I try and find that area that I think really kind of creates a good solid area of support and resistance. In this case, there's some support going all the way back to June of this year and some consolidation, etc. I think the 156 level is just a good solid area to identify as where price action might do something. Whether that's bust through or retrace, who knows. I think it's just a good idea to have it marked off on the chart. So there it is back down to the hourly chart, and we have it marked off at the top. Next, I try to identify even more areas of more local areas of support and resistance. Fibonacci, for example, is a great way to determine where price action might turn around or continue in any given price action that you're looking at. So since we're in a downtrend, when we add Fibonacci to the mix, we start to see that the 618 level is above where price action is now. It might not be a bad level to expect price action to get to around that 157 area after a breakout perhaps from this bull flag. So let's mark off that level. Here we've done it in pink, and what I'll do is I'll remove Fibonacci so that we don't have to deal with that anymore. I'm a big fan of trying to keep the charts as clean as possible, where you identify the areas that you need, mark off what you need on the chart, but then take off the stuff that you don't really need at the moment. Now we're ready to kind of guess on where we think price action might be going. This typical pattern usually has some sort of a breakout, like this, followed by a retrace back down to usually the top of that flag. And then, of course, what we're hoping for is a continuation on through to our level that we've identified from the Fibonacci 618. I also think it's important to identify those areas where we think price action may have a hard time. In this example, we see some congestion towards the beginning of the month that when we look at price action getting back into that level, we could see some level of resistance. So let's just keep an eye on that and see exactly how it plays out. So now that we have all of this stuff done, we've got this framework set up, we've got our MAs in, we've got our support and resistance areas, we've got an area where we think there might be some resistance. When we bring that back to our original idea of what we think price action might do, what that leaves us is a solid area for entries and exits. In this case, we're looking for an entry after it retraces back down to the top of the flag, in this case the green line. With a stop loss, I like to see it below the weekly pivot, and in this case it's actually at a nice Fibonacci level from the run up that we see. And then of course the target is going to be up above around that 618 Fibonacci, the weekly R1, just a good solid number that's also above that consolidation area. What you're really boiling it down to is a 100 pip gain, and we're risking 60 pips. So that risk to reward ratio is 1 to 1.7. Very respectable. Nothing wrong with that at all. Now, as with any trade, guys, I don't know where that's going to go. I don't know if this is going to work. I don't know if it's going to fail. We need to then go on and make sure that when we want to place this trade, if it has broken out and retraced, did it in fact happen around a news event? Is there fundamentals involved that we need to be concerned with? There are still some things in play that we want to be sure of, but this is what we'll be watching and waiting for. Patience is really key. But if nothing else, I want you to recognize that you can really take something that looks like this, and you can add some things to it along the way that really start to give you some sort of framework, a real idea of where I think this setup is going to be. And when you really put it all together, it makes it nice that when I've been able to identify all of these different areas, all of these different parameters, you can come up with something that really makes a nice, solid, high probability trade that you can be proud of, you can be confident in. And if you do this enough times, law of averages will help, and you'll win. You don't have to win a lot, we just have to win a small percentage to still be on top. In this business, really, you win by not losing, and that's keeping those losses small. So with that, I hope everyone gets something out of this. I'll post this on the blog, and I'll also update it to see where price action is going and how it's done since the video has been posted. Thanks again. If you do have any questions for me, feel free to email me at drebg@yahoo.com. Good trading. Bye, everyone.